Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tiggre. Our victim of the day, or our guest, is Bob Felder, CEO of Renaissance Gold. Longtime readers know that this has long been a favorite prospect generator of mine, but I'll let Bob go ahead and tell us about what he's doing with the company, and then we'll get into some questions.
Thanks, Lobo. As most of you know, we're a prospect generator, and we continue to generate high-quality targets and then attract partners to come in and fund exploration, mostly the drilling on those projects, in exchange for an equity interest in the project. We've been doing that very well in the last 2 years, and we've attracted 10 new deals and we've probably got 8 to 10 of our projects drilled by partner funding. So we're doing quite well in terms of executing on the model, and that's going to help raise the probabilities of us getting involved in another discovery.
That was a very succinct answer. The prospect generator model, oh, that's good, that was a compliment. The prospect generator model is famous. Rick Rule, all these people like to talk about putting other people's money to work on your behalf. If you have something that you think is good, why would you do that? Why would you give away the majority of the interest? Yes, you get their money, but they get most of the mine. Explain that to us. Why does this make sense?
Well, that's true. I mean, for us to explore all of our targets ourselves requires a lot more capital intensive spending and raising more capital on a regular basis. As you know, the last several years the market's been difficult, and in particular raising money for exploration has been difficult. So to avoid major dilution to follow that model, we're willing to give up equity in a project and maybe only have a 30 or 40% equity at the end of the day. As we know from our predecessor AUEX, having a minority interest in a project that's a discovery and a win is still a very, very big payday for shareholders. So we think it's a good way to leverage risk and to not have to blow out our capital structure.
Do you ever stay up at night saying, gosh, I wish we had an option that one. I like it so much.
I hate to admit the answer is yes. You know, we can't know everything. You do what you do and you make the decisions you make at the time you make them, and a year or two later it might look like, maybe we shouldn't have done that, but that's the business that we're in. So once in a while that happens. Okay,
so you said 8 to 10 projects drilled over the last 2 years. How many are getting drilled this year?
6 this year. Actually 2 are ongoing right now. We've got our Ecru project in the Cortez trend being drilled right now. We just started drilling about a week ago with our partner S2 Resources. This is a project that's just north of Pipeline and Cortez Hills, and you know, we're among the elephants, and we think it's a pretty exciting opportunity for the company. Our partner's willing to put in enough capital, and they've done a really good job of designing drill targets, and they're willing to take a big chance and drill some deep holes out there. So we've just started that. We're also Anglo Gold, who has an option on our Silicon project down in Beatty in the Bear Mountains district, is currently drilling. This is a phase 2 program. They did a 6-hole core program in the spring. They're currently following up. We've announced a 17,000 meter follow-up program on that. Those results have not been released, although we know that there's enough encouragement to have paid us the option payment, and it's a fairly significant program that they're into. So we're hopeful that that one's going to turn into something.
Okay. And how, you know, prospect generator, we're using other people's money. How much money are we talking about? A program like this, what does that cost?
This year, I expect that at the end of the year, we won't know Anglo's numbers because they're not required to disclose the expenditure, and the structure of the deal is such that they just pay us a certain amount of money and they complete the option. But based on the amount of drilling, we figure they're spending in the $3+ million range, you know, in this year, and the program will go into next year. The other partners, we've added up the costs, and we think that in 2018 we'll have $5 to $6 million of US dollars spent by partners on our projects. And that opposed to our burn, which is $1.5 million Canadian per year, or thereabouts.
When I've talked to you and I've talked to Ron in the past, I always ask, which one's your favorite? And you always hate it when I ask that, because it can be your favorite, but then the drills don't turn up what you hope for, and then you have to move on. But do you have a favorite right now?
The favorite's always the one that's being drilled right now, right? I mean, we're drilling.
Well, you have 2, so Silicon or Ecru, which one are you most excited about?
Well, I think Ecru, because if S2 completes the earn-in, it would be a 70-30 joint venture. We would maintain 30% equity, and if it's a significant discovery, it's in a very well-endowed camp in the Cortez area of Nevada, and to have 30% of a project like that would be company changing and would be transformational.
30% was plenty for AUEX Ventures back in the day.
Well, it was 49 in that case, but 30 still would have been a good
But by the
win.
time by the time we got Frontier taking...
It was a 51-49.
Was it at that point? Yeah. My mistake. Okay. For some reason I thought it was... Okay, yeah. Very good. All right, so over the years, there's always been a favorite, and it never works out. It's always on to the next one. And that's the nature of exploration. I get that. On the other hand, you know, you've had loyal shareholders for a long time. I've had loyal readers for a long time who followed this story. And every time we talk about the projects that we like so much, and then it seems like, okay, that didn't work, we move on to the next one. Mm-hmm. I'm sure that everybody understands that's the nature of exploration, but I'm sure that the people out there want me to ask you, when is the next discovery going to happen? Yeah, we love these projects. When is it going to bring home the bacon for us?
It's a good question, and it's a tough question. You know, Rick Rule yesterday gave a talk, and he mentioned that, you know, maybe 1 out of 3,000 anomalies becomes a mine. So when you look at exploration, we look at it as a bit of a numbers game, and our business model is to test as many targets as possible. So it's hard to tell you when we will hit and which project it will be, but we continue to generate new targets that are high quality. I mean, there's always a threshold of quality. We don't just do it to check a box and keep the portfolio going. It's always a high quality target in our estimation, and it's one that has to be marketable to a partner. So by drilling 6 projects a year, we're operating at a good level, and we're raising probabilities that, you know, one of these ones is going to hit. I can't, you know, I wish I could, if I could tell you which one, that would be the one we drill ourselves, and we'd raise the money to do it ourselves. But it's, you know, it's not the model that we're following.
Right. Well, and I have to commend you for sticking to the model and not abandoning it, because that's how you end up blowing out your share structure, mm-hmm. right? You fall in love with something, you decide, oh, I'm going to raise $10 million and drill this myself. And then if it doesn't work out, you've already spent that money and blown out your shares. How many shares do you have issued and outstanding right now?
A little over 62 million shares issued and outstanding. And we're currently trading at somewhere in the 17-cent range, so our market cap's 10 to 11 million right now.
And that's after 8 years.
Mm-hmm. You know, and as you know, well, you may be about to ask me this, you know, the market from 2011 until, I'd like to say recently, we're not sure where we're at. The market's still kind of struggling along, but for us to execute our business model, we need a market to support it, because we need to have companies that are willing to spend money on exploration. And so from 2012 through 16, it was pretty quiet times. It was a little bit more of a survival story. And so now things have ramped up, and we're operating at a level that we're happy with, and mm-hmm. you know, we're hoping to keep that up. I have several new deals in advanced negotiations, so I'm hoping that we're getting ready to tee up the next 2019 drilling programs that are new things that are coming in. So, you know, we're playing the numbers game, and I wish I could tell you which one and when, but I can't.
You have to keep knocking on the doors. One will open at some point. Okay, so one more question. If things go really gangbusters soon, say the midterms upset things, gold goes north really quick, and suddenly there's a lot more interest in the sector, and you have more of these JV partners looking for options. Do you have the staff to deal with that? If there's I mean, Nevada's a big state, there are other players out there. Mm-hmm. Do you have the personnel to go after this we know the market will turn up at some point? Are you ready to grow with that?
Well, we do run a lean and mean team, and it's to be in concert with the burn rate that we want to maintain and the ability to raise money. We don't want to raise money every year. We'd like to do it as little as possible. Hopefully Anglo will complete their option, and in 2020 will pay us the remainder, $2.4 million, which is kind of like our next financing. But if those opportunities arise, we may grow very modestly, but we're not looking at becoming a lot bigger. We want to operate effectively at a size that we can manage well within our treasury. So, you know, I think it's a matter of shifting priorities rather than growing.
Okay, all right. So we have other people's money going in the ground right now. We have multiple targets of interest, and we're well funded for now. We mm-hmm. won't need money this year.
Nope.
Will we need money next year?
No, we've got about, our current treasury in Canadian dollars is about 3.4 million, which is somewhere in the vicinity of 2 years of burn. The more deals that we bring in, and if we operate those projects, that slows the burn because we recover some costs that way. So that's part of our strategy to extend our ability to do what we do. Last year we only operated 1 project. This year, with the deals that we have coming in, I'm hoping that we'll be operating 2 or 3 of those, so that will help. And then again, as I mentioned, if the Anglo payments come in 300,000 in 2019 if they stay in, and 2.4 million in 2020 if they stay in. Those are U.S. dollars, so that would essentially give us about a 4-year timeline without worrying about going to the market. Without that, we're at about 2 years now.
Okay, all right, very good. And meanwhile, drill results pending from both ECRU and Silicon.
ECRU just started, so those drill results are out a ways, maybe end of year, first of the next year. Silicon, it's up to Anglo because of the nature of the deal. When it becomes material to Anglo Gold Ashanti, which is a larger and higher goalpost than Renaissance, then those will go out in the public. We're hoping that after the 17,000 meter program, if they have good results, that they'll be willing to start talking about it.
Excellent. Okay, well, thank you very much.
Thank you. Glad to be here.